So by implementing a freemium strategy, I have been able to bootstrap RB2B to 1.35 million ARR in 17 weeks after launch. The results did not come immediately, but the pricing was wrong, which I found out actually by posting on LinkedIn. For 6 weeks, we had 3,000 customers and 13 paying. So 3,000 signups and 13 paying. Which channel is it related to? So we get all of our traffic primarily from my LinkedIn. LinkedIn does this amazing thing they visit my website right below your name when you post. So we get a lot of impressions, and that's what's driving traffic. The tactic or strategy in 2 to 3 lines. So this is a freemium strategy. It's pricing and go-to-market, but it's more than that, because in order to make a free strategy work, it has to be a dead simple product that's super easy to understand and very easy to implement. So it's kind of product as well, but it's mostly pricing and packaging. To implement the free strategy, we kind of just, it took us probably 6 months to build the product. So that's about right. How many people did it take you to implement this? So we had a team of 4 until maybe 3 weeks ago. Now we're 6. We hired a CS rep and a salesperson. How much money did you spend implementing this? I don't know, but it's just the salaries of the people, My other business is profitable, and this kind of is, at the moment, it hasn't been broken out yet. So it's just an expense in the other business. So who can implement this strategy? I don't necessarily think every single SaaS could, but if you have a product which has a relatively high gross margin or kind of fixed cost or whatever, and more importantly, no one in your space or tangentially is doing anything like free can be incredibly disruptive. And I would encourage people to go learn about MailChimp and what they did to the email marketing space, because that's what inspired me. And, look at what's happening to our company. You could go to rb2b.bearmetrics.com and see how fast it's growing, which if you looked at the pricing on our website, it doesn't even make sense that it would be growing that fast. So
if that resonates with you, listen along. Also, check out our other episodes. You're listening to TNDR, the B2B SaaS growth podcast brought to you by Spear Growth. The goal of the podcast is to enable you, our listeners, to generate an additional $100,000 in cumulative pipeline by May 2024. To do this, we bring people who have made a real impact in their companies. They cut through the fluff and dive deep into one tactic or strategy of theirs. I'm your host, Ishan. Let's generate pipeline.
Hey, Adam, thank you so much for doing this. So just for some context on from when I've been following you on the entire product, right? So I actually got to know about you after you launched RB2B. And I remember the first time we really we had a small conversation was in one of the webinars you did before you started the weekly webinars or what you're doing now, right? It was a webinar that you did. In that, there were a couple of discussions on how are you using RB2B, and then it was usually for outbound or inbound-led outbound, as you call it. But then I run ads and SEO agency. So I was proposing, hey, I care about this more I want to optimize my clients' ads better.
Yeah.
Right. So that was, I think, the first conversation we had. This is RB2B had just launched.
Yeah, it was like a Clay webinar. I remember. Yeah, I was in Mexico City at a wedding. It was in March. I think it was literally 2 weeks after we launched. Yeah.
Yeah. So love the product. We use it for a lot of our clients. We a lot of it works great in a lot of scenarios, right? So for a lot of different use cases. So love what you're doing. We're glad to have you on the show.
Great. Thank you. I would love to hear about those use cases, by the way, because I'm actually doing a webinar later. Actually, do you want to be on the webinar that I'm doing later today?
Sure.
It's at 2 p.m. Central. Andy Mewborn's coming on first, and then he's coming on for 30 minutes, and then I could have you come on second and talk about, he's talking about use cases related to sales. I would love to hear about these use cases that you're using.
Yeah. I'm in.
Great. I'll send you the details after. It's on my list.
Perfect. Do you want this to be in the recording or you find it?
Doesn't matter to me.
Perfect. Okay. So that's basically Adam for you guys, right? So Adam, could you still give a quick intro to everyone about what do you do, And then like a bit of history, like a couple of lines, and then we'll get right into the tactic itself.
Sure. I have been a SaaS
SaaS.
founder for, over 10 years. I'm currently the CEO of two startups. One's called retention.com. It's 22 million ARR, bootstrapped, started 4 years ago. And then we just launched RB2B.com. It's at we're 17 weeks in and it's at 1.35 million ARR. And both of these technologies do person-level website visitor identity. So somebody can hit your site, and it only works in the US. They can hit your site, not fill out a form. We'll push the LinkedIn URL into a Slack channel so that a BDR or SDR can follow up with these people. So basically whatever as you sort of alluded to, whatever you're doing to drive traffic, this will allow a salesperson to be much more efficient with the traffic that's coming in. And we don't get everybody. It's like 20% of US traffic, but the people that are in your ICP who are on your website, somebody should be reaching out to. And it's just a matter of how that happens, right? So that's what we do.
Perfect. So love the intro. Just very quickly, right? So it just seems obvious that, there should be a free trial, right? But there's a lot of thought that goes behind it, or like behind that decision. So what did that look like? Because every side is obvious.
So we actually have an almost fully functional free product forever. The first company I ever started was in MailChimp's space. It was an email marketing automation app. And I watched as MailChimp absolutely dominated. I mean, they had 60, 70% market share when they got acquired. And it was because they were a great company that had this free offer. They made the economics work. Nobody previously thought that was possible in that space. How could you have an email builder and newsletter sender, a mass newsletter sender for very small business that did not require humans to support it? And sort of the economics made sense to run it for free. And it's the craziest thing, 90% of the email market doesn't think you have to pay for email marketing because of MailChimp. And then once you get past 2,000 contacts, you realize you do, right? Well, Intuit bought it and they've changed the freemium offer. But I was so captivated, and I've just read so much about the psychology of pricing. There is an irrational attraction to free. So kind of how ours has ended up working out, it's more of a free trial for any serious user. Because if you have above a certain amount of traffic, we'll give you a month for free, but then you got to start paying for the leads and integrations and all that stuff. But for I call them toy users, for people that don't really know how to book a demo and they don't really have any traffic, it's still really interesting to see if you get 3 website visitors a day, it's still really interesting to see the LinkedIn URL and the headshot of someone who's on your site, because then you can reach out to them, right? My wife owns a little PR firm. She gets 3 or 4 visitors a day. She loves looking at RB2B because maybe a prospect's on her site and she just sort of knows they're more interested. So I think that there's a difference between free trial and being able to make the claim that it's free forever. And I was just so deeply influenced by watching this MailChimp journey that it was important to me to be able to credibly say this is 100% free. And I think that I can, right? Because for most people, quote unquote, most people, certainly not you, not your clients or whatever, but for most people, it does remain free. And it's, so your question before we started was kind of how much does that cost? And it's a strange question, right? So I think that the reason that our pricing is so disruptive in the space that we're in is because in order to basically fulfill a free offer, you have to have a very high percentage of your data costs be fixed. Does that make sense? You can even right now we have the data asset, we just haven't cleaned it up yet, but we're paying Apollo 4 cents per lead to give free customers records, right? You can't do that and make the model work at scale. So I think one of the reasons why the pricing is disruptive for this type of product is because we have this guy Santosh, who's this data guy, and he was able to put together this data asset that will ultimately allow us to fulfill this offering for like almost all fixed cost. And then we can like do something like after 30 days, if you're not paying, we could only fulfill from our fixed cost. You know what I mean? So there's like that part of it. There's a COGS part of the equation that you have to have in line. For SaaS, it's not really that big of a deal. You know, for you as an agency, it would be a massive deal. You couldn't just give your service, you know, but there's that part, and its variation, you know, varies between businesses. And then there's the part of like, well, how much money are you giving up by making it free? Which I think is kind of what people are more curious about. And we had a strange journey because of my original pricing conviction and how wrong it was. I was originally thinking we just charge $495 fixed, and people would pay that for the integrations. And then I learned that if we were giving the Slack push away, which was the magic moment of this whole thing, people could parse the Slack block and do whatever they wanted with the lead. And kind of like no matter how much value we tried to stack on top of that, people weren't willing to pay $495. It was very strange. So then we looked at all of our signups and we drew a line at 85%, which was 200 leads per month. And we said, that's where we're going to start charging. So it turned into this thing where I'm marketing it as 100% free forever. People actually get a free trial who are kind of users that would pay. And then now for the last month and a half, 9%. So by the way, like the first 3,000 people that signed up, we only had 13 paying customers with that $495 plan. Now, and by the way, you can go to rb2b.bearmetrics.com and check out all of our SaaS metrics. Now we're converting free to paid with no salesperson at around 9%. So it's like, on one hand, you might say, well, aren't you giving up revenue from these smaller customers? But on the other hand, I think that A, by having them as like word of mouth marketing people, and B, being able to make a credible and audacious claim that is not challenged, that the product is 100% free, it just opens up this enormous top of funnel that I don't think you can actually measure the trade-off, because there's something strange about like the MailChimp situation, right? The longer that MailChimp existed, the more exponentially huge that value, that core value proposition and the viral loops they built off of it became. So in year one, what they were giving up was probably substantial. By year 11, they weren't giving up anything. They knew it's just it was so obvious what the power of what they were doing versus any other go-to-market model in that space. So, you know, I have this incredible luxury of my other startup being very profitable. So like I can afford, I didn't know how this was going to work. I had no idea. And by the way, like 6 weeks in, we had 13 paying customers and it didn't look good, you know? And then it just clicked and now it's magic. And I think anybody would die to have those economics and like the top of funnel that it has or whatever. But it's like how much, you know, if I would have stayed at $495 fixed price, it would have cost me my whole business, right? Like we were at 5K MRR and it wasn't growing. Now we're at 115, you know, 9 weeks later or whatever, just on a simple price change. So to me, it's not just about what the revenue you're giving up or what it might cost you. It's like, you know, if the pricing and packaging is correct, this free thing can just make it magic. But you won't get there immediately, right? It like takes a bunch of experimentation, a lot of patience. There's a lot of other things going for us as well, by the way. Like my LinkedIn presence is magic. Like, and by the way, the way that I've been approaching this the entire time is like, I view us as all of us in an attention war. So it's like, what can you do that will force people to talk about you? right? And like the content that I write, like that's kind of the goal. It's like I want to hit the right audiences, but like it needs to be good enough to where it gets talked about and it gets forwarded, and that's why I'm so transparent. That's why I'm, jumped on the 6 cents thing or like whatever. And then that core offer is just so crazy that it gets talked about. It's like nothing anything like our product is anywhere close to that type of free. Even though we know, you and I, yeah, like you're going to end up paying a few $100s a month or whatever if you have a bunch of traffic. But that's still for the people that are paying. This is also important. So like, I think another part of free, which people do not take seriously enough, is that free is great for a dead simple point solution that is super easy to understand and super easy to install. That's what free, that's free is the best there, right? I bring up Warmly a lot just because they're kind of annoying to me because they pick on our LinkedIn engagers, but like they try to do freemium and their product is so complicated that it just doesn't work, right? Like they say that it's what we do, and then it's like, well, it's not actually that. It's like you got to rip out, drift and zoom info, and then we're an orchestration platform, and like whatever. It's like words that you don't even understand what it means. So like, of course, freemium is not going to work for that. But like, if it's like super easy to understand, really easy to install, and then the pricing itself is zero friction, so it requires no negotiation. It's literally like my idea was, if this is good for you, then the price is not going to be what's stopping you from buying it. What will stop you from buying it is you can't book demos in the first place, right? Like if you can't, So anyway, that's kind of all. One last thought about it. So like, we could have gone for the mid-market and tried to charge 30 to 50K ACV, and that would have been a lower churn buyer persona than we have, which ultimately an investor would say is better for a SaaS company. My view was, we would have taken that money and just paid for more marketing and salespeople. So if you just smash that and make it free, if we were going to break even on those customers anyway to grow, if you just smash that and make it free, then the product distributes itself. Which is a really interesting way to think about it.
Everything that you're saying, you've made it very simple, but it's not, right? Like if
No.
I were in your shoes, I would have made spreadsheets, and then none of them would have, there would be so many assumptions in it that it just would not, it's not maths. Like there is a lot of maths, but then all the important stuff is not.
I think you just, with that last thing you said, I think you absolutely nailed it. I really deeply believe this. Like, the most important parts of getting any business off the ground are not the numbers. It's like very sort of not subjective, but it's things that are not measurable and not tangible. Like for instance, the way that my content interacts with that free offer, you can't measure that, but I know that they work off of each other. And I feel very convicted in that.
And I'll just summarize it, and then I'll ask a couple of questions on it. So in the way I think about it, right? So, and again, this is a growth episode, but it's more finance for me, right? Because that's the way you start taking decisions is brilliant, right? So, and it all, okay, so the first thing that you had to look at, that was my original question as well, right? Before we start recording. One was, how do you make the cost work, right? So in that, I really like how you sort of broken down into 3 different things. The first one was, and I'm reading off things here, right? But it's the how do you manage cost of fulfilling? The making as much of it be fixed cost so that you can give it away infinitely without it hurting was, that's a brilliant idea. I have given away things in the past and they've never had a fixed cost. And it always hurts every time I give it away. So that's actually more helpful than you think. Maybe we can discuss some other time. But that was a very simple, obvious once you say it, but then a very useful point for me. The next was the opportunity cost, which is also very interesting, right? So how do you even, you've been doing this for 10 years, so is it just like hey, this is what my hunch is how you took that decision, or?
Yeah, well, I think it's like the desire to emulate MailChimp above all else. I know that they made it work, right? And I know the prices at which they made it work. So, and I just know how powerful it was, and no one took them seriously in the beginning. It just like they were at 2 million ARR when they decided to do this. And it was the year that Constant Contact went public. And even 3 or 4 years later, Constant Contact was like, oh yeah, there's this tiny vendor MailChimp. They're under 20 million in revenue. That's the only serious, only this. And they were at like 200 at the time. They're like, that's the next biggest email marketing player. We're absolutely dominant. And that was not the case. They were at like, silently, like just crushing with this pricing model. So that's what, I tried to do it with retention.com, which was called Get Emails, like a year and a half ago. For a lot of reasons, it didn't work. I think the biggest reason was a small person couldn't make that product work, whereas there's still value for a tiny business with this one. It's just a matter of what that value would be worth to them. But if it's free, it's valuable, right? Like if I'm not charging you to see the website visitors, you'll see it. You'll choose that. So anyway, I think, my desire to model other massively successful businesses that I've just watched in absolute admiration of is kind of like, I knew it was possible because I saw it. If I hadn't seen it, I would have never thought it was, right? It's like, it's just a crazy, it's like, like instead of charging with a 30-day free trial, just give it away for 90% of the market. That doesn't even, it doesn't make sense that would work, right? But it can. It's just it can. It's like it's not. You can't make the statement that it works for everybody because it won't. But like, it can. Just depending on how the rest of your go-to-market machine looks.
I actually, that's very helpful that, hey, you had proof. It wasn't like, hey, it's just magic and gut feel, because that's what it sounds to me like. So I'm just trying to find what can I use, right? So also in the cost of fulfilling part, I know we only covered this, but essentially there's a fixed cost and then you get to a point where it's break even. That would also be true if you were giving it away. There would just be one extra variable of how much did you give away and how many are paid, right? So it would
Exactly.
still work if there was a small piece.
Which by the way, so I mentioned we're still on a variable cost, 100%. So what we did, which was a horrible user experience, we were worried that there were a bunch of people that didn't actually like the product that we were just like buying leads for and sending to a Slack channel they weren't even looking at. So there was a point in, I think it was April, where we just stopped everyone's account and we made everyone actually go back in and click, please continue. They either had to buy it or they had to say, but they had to actually take an action to get the leads. And that's what we still do. It's not the experience that I want because I don't view it as true to the 100% free offer. But at the end of the trial, we force people to either pick a paid or free plan so that we're not just buying leads for people who don't care. And my idea is if you wake up 4 days after your trial and you're like, where are my leads? Then I'm fine continuing to give you leads, right? Yeah. But like, if I never hear from you again, then you didn't really like the product anyway. But like, that's not exactly how it's marketed, right? Like you would perceive it as something different by how we market, but like that's marketing, right? Like that's, no one has called me out publicly for this product not being 100% free, right?
Yep.
So.
No, I actually love that, right? And then finally, there's a difference in conversion, like there's an obvious difference in conversion rate, both from, let's say, a person who sees the product and then buys in, and also someone who, for example, goes to the website and then actually, or like if there's someone who's using it and then becomes a paid user, right? So the free offer helps with both. Is there a way that you use or like a framework you use to see, okay, how good an offer is? Or a way that you think about it? Because it's, like everything free is not like, I don't
know.
buy.
So Santosh has this saying that like, in many ways, it's harder to get people to use a free product than a paid product. And I also heard Patrick Campbell say, who is the Profitwell CEO, if you're going to do freemium, the free product actually has to be better than the paid products in the market, or people just won't use them. It's a very strange dynamic. So that I think is part of it. Like I had a very good sense that with how people were telling me about their levels of satisfaction with the account level resolution that existed out there, yet they were still using them. I knew the shortcomings of our product and I felt that it would be better, you know? So it's like, and then I think I've also just over time gotten, it's like I can write a LinkedIn post and I can have a really good idea of how much of a banger it is going in. Like, oh, this one's hot, right? Just because it's like controversial in the right way, but it's not too far. And it's like what I actually believe. And it like, you know, winds up certain people, whatever. And I think that in a similar way, I just have developed a sense for what, you know, and it's not right every time, but like for the type of offer that is disruptive. And, you know, it's like people were telling me when it was free, they're like, I just feel like I'm cheating, you know, like why is that? And granted, it's not, you know, most of them are paying us now. But you know, I had a set, and by the way, like I would actually advocate if you're starting a SaaS startup to do something like I did, and maybe even intentionally, just like put pricing out there that it's insane. And because you can change pricing. Like if your product is valuable, you can change, like we could raise prices from $4.95 to $7.95. If someone's booking demos, they're going to do it, right? A demo is worth $1,000 to a lot of people, right? So in the beginning, you need word of mouth and feedback more than anything. In my opinion, way more than money, right? The money, it's like money will come later if you really get a ton of feedback and you get a big user base, right? You can monetize that whenever, but like, man, in the beginning, there's just so much working against you that that's another huge benefit of just having some insane free offer like right out of the gates, I think. I mean, again, I've never done it before, but like it really worked this time. But as a combination of all of that, it's like the product was really good. It was very different, like so different than what's out there. And nobody else was doing it. That's another thing, by the way. If you were to go into the email marketing space when MailChimp was at its heyday and it had 2,000 contacts for free and they were spending $1 billion a year on advertising, if you tried to just start your startup and offer 2,500 contacts for free, you're not going to gain meaningful market share because there's already the incumbent industry leader that is doing that. So this was so attractive because the existing products, not only was it differentiated, nobody was even contemplating a free offer. They just had a bunch of free trials and enterprise products.
Just a follow-up question on that, which I was thinking about, right? So how do you, maybe not, it won't happen in your space, and I don't know if it would happen in a different space, but then if your pricing is so much better, why wouldn't the incumbent just, you know, copy or emulate some of the things, because they would be able to implement that at scale?
That is an awesome question, and one of the things that I like so much about free. If you have an established business with a lot of revenue, it is almost impossible for you to then say, I'm not going to charge 80% of my customers, because you have to take the revenue hit. That right, Constant Contact could never match this free offer from MailChimp because they couldn't take a quarterly earnings hit. If you have growth equity funding or venture funding and you haven't always been like somebody with 30 million ARR, if they tried to do a free offer, their booked demos, which is their entire business, would go to zero. And they can't, you know what I mean? Like you just can't. So it's like this amazing thing where if there's a bunch of established incumbents, there's a really good chance that no one's going to match that offer. You know, another thing that I love about free, like I really love this free thing. I've never, and again, I've never been able, like I tried 4 years ago with Get Emails, which is now retention.com. We tried last year in the Shopify ecosystem to create a version of retention.com that was freemium. And it just didn't work. We had 50 beta testers on it. It wasn't showing them value. The math wasn't going to work with like making it worthwhile for us to push it out. Finally, this is like the exact situation. It's like the user base is thirsty for it. It shows them value, even if they're tiny. It's super simple to understand what it does and install. And I have a megaphone that can like really spread the word, So it just kind of lined up.
Perfect. Okay, so then you also mentioned that you were looking at, free trials to paid users is one thing you were looking at. What were other metrics that you look at when you launched this?
So, I can actually show, we changed the scorecard a little bit, but I can show you what we look at. These metrics are slightly different than they were until this quarter, but here's what we're entire screen. Boom. Here's what we track. So signups in a given week, net new customers in a given week. But by the way, we weren't tracking net new customers and logo churn because at the beginning of the last quarter, it's like we weren't converting people, so it didn't make sense. You know what I mean? It was like we need to figure out the goal was to figure out free to paid. Now it's sort of figured out, so we're tracking this stuff. And then MRR, and then number of G2 reviews, the social impressions per week, which has gone down in the last few weeks. I don't know why. Number of pieces of UGC created by the ecosystem per week. And that's not including stuff about me, podcasts I'm on, lists of tools. That's literally somebody writing about an RB2B a workflow with RB2B in it. And then number of total support interactions, not tickets, but it's like people looking at blog pages and all that shit. And then the number of interactions, percent that a human had to be involved in. And then emails sent, which I haven't updated in a couple weeks. And I'm now tracking the conversion rate versus number of total signups 5 weeks prior, which is like a little over 30 days.
I would have never thought of tracking UGC credit per week. That's
dude. I mean, I just like that. So I came from retention.com. We sell to these e-commerce guys, and this guy started a showerhead company called Jolie. He's a really savvy entrepreneur, and with 3 employees, they got to 50 million run rate in 18 months. And the way he did it was he harnessed UGC. They just like outbounded 30,000, like low end Twitter, TikTok, and whatever influencers sent him a showerhead, and they were just like, if you like it, post about it. And they got tens of thousands of pieces of UGC made by these people, didn't even pay for it. So like, I think there's something similar to be done somehow in B2B. Clay is doing it quite well. I think we have like, for different reasons, I think we have a similar opportunity as them. Yeah, man, I just think like it's so hard to outbound now, that like these other ways of harnessing the way that the world is set up and how people are consuming content and how people are buying, are just incredibly efficient. And then the argument is, well, like, enterprise products can't be sold that way. Like, you can't sell a $250,000 piece of software. It's like, well, why is that software $250,000 anyway? Yep. It's literally to support the people that are selling it. And like, why are there so many fucking features in the first place? Most of them are not even valuable, but it's like, so that people won't churn. So like, you add complexity in order to raise prices, which then supports a larger sales and marketing organization. And I just don't think it needs to be that way. It's like, that model certainly can exist, but like, I think that the world is much more set up to consume software like a D2C product, right? Through influencers, through UGC, through like very like free point solutions that you can try in a second and see value immediately. Like, I think brand is much more important than it used to be. And like, you can sort of build these like religious movements around certain ideas. And I'm really excited about doing that with this. Just like evangelizing bootstrapping specifically to 10 million ARR. It is the holy land. If you can bootstrap your SaaS to 10 million ARR, you could do whatever you want. Sell your company the next day for $50 million. You could, try to make a unicorn. You could hire a CEO. You could work 1 hour a week. You could work 100 hours a week. You could keep bootstrapping it lean for another 3 years and pay yourself $5 million a year in a couple of years. So like, how do you do that? You go to market like I'm doing, right? In these like very, very lean ways that don't involve armies of people on your payroll. But it requires a different type of product and pricing, right? Like we aren't even close to charging what we could for this. We would have a much lower conversion rate. We would have probably much higher revenues, but that's not the point. It's like, how can I do this as efficiently as possible and show other people that this is a possible way to go to market, right? That's what I want to do.
Love it. So the fastest way to get to 1 million is probably not the fastest way to get to 10, right? Like that's the, I think
So by the way, I don't even think it's about getting to 10 the fastest. I think it's about getting to 10 the most efficiently without taking external capital. And one of the pitfalls of getting to 10 without external capital is it's like, I think a lot of people are stuck at 1 to 3, but then once you have traction and break out to 5 or 6, the system shows up at your door and wants to tell you your company is worth $150 or $200 million. And it's almost impossible to resist the temptation to take their money. And then once you have taken their money, you are fucked. Look at what happened to Clay. Everybody thinks that's awesome. Mark my words, Apollo is not in a good spot right now. They're not. They raised at 1.6 billion, then they stopped growing. Clay is going to do the same thing. They'll have one more huge round. And I think there's like a low single-digit % chance that someone comes along and buys them for like $3 or $4 billion. But I think the odds are probably they'll raise it like 1.5 and they'll just be stuck there. And like the CEOs be banging on their board's door to try to get a pay raise and stuff. And like, I don't know. So
I agree with you with the entire. I love Clay. We use Clay.
It's incredible
all the time. But I completely agree with you about the fan base point. So 100%.
Yeah, it's like raising 62 million and $500 million. It's like guys, like it's just not setting the founders up, in my opinion, for like. And look, I'm sure they took $5 million off the table each, maybe 10. That's great, but like, it's not setting them up for. When you do that, it lowers your probability weighted outcome of financial success and definitely happiness. Because like, what do we want? We want to be free. We want to do whatever the fuck we want. We want as many options as possible. Guess what that does? It takes all of them away except one. Sale for billions of dollars. Right? Now they have to sell for 1.5. When they do their next round at over $1 billion and they're clicking glasses because they're unicorns or whatever, then they have to sell for 3 to 5. Who's going to buy Clay for 3 to 5? There's like maybe 5 companies that can actually buy a company for $3 to $5 billion. Like, ZoomInfo can't. Their stock's only worth $3 billion right now, and they make $1 billion in revenue. $1 billion, right? Like, it's a strange game, but the system. This is what I want to evangelize and what I want to form a movement around. The system forces you to make that decision because it is so blinding to look at what you have created and have someone validate that it's worth $500 million and even let you take off a few % at that price, right? But then you're stuck. Then there's only one way, right?
Just one last question. Just so that we can then wrap. I want to wrap this up on time, right? So, from a cost perspective and a team perspective, right? So, apart from the obvious stuff, I think you've mentioned 2 things, and you've shown a metric for one, and you mentioned the other. So, the 3 cost bucket that you mentioned on this episode till now was, one is like the cost of fulfillment, second is the cost of selling, and third is the cost of support. Right, like that's how I'm dividing the 3. And then I think in the metrics dashboard, you were very closely tracking the number of support and and that was linked to the cost of support part. Is there anything else that you would need to track very closely so that this doesn't go out of hand?
So like, and I was tracking this sort of amount of perceived UGC we were getting to, right?
Yeah.
Like how many people were we getting to create reviews for us? How many people were we getting to post for us? So this was all very gut feel. So I was also like, I was tracking some stuff that I eliminated. I was tracking script churns. So like people who had collected contacts the last 30 days, but not the last 7 days, meaning they like signed up, but they pulled the script off. Once we started tracking free to paid, I thought that wasn't really relevant anymore, you know, because like really all I care about is free to paid. I mean, at the end of the day. So, but I think those are the key 4 buckets. It's like just going down the funnel. It's like kind of like top of funnel, then conversion, then cost of fulfillment, then sort of like, can we make this as close to self-serve as possible? Which I thought that last one was going to be like one of the hardest things, but I found the perfect guy. We hired a guy for CS at retention.com, not even knowing what he was going to do, but he was like an engineer and like he had just done one of these self-serve support things for like an AI company before he started working for us. And he's just been incredible. This guy, Rob, like it's like a combination of, he just gets it. You know, he writes the post perfectly. He knows how to train AI bots. He's like making these super complex workflows, which can solve everybody's problems.
Perfect. Okay, I think that's all the questions I had. Is there anything that I should have asked on someone trying to do this, but I didn't?
No, I mean, we covered it all. I love that topic, by the way. I'm glad we picked it. It's like it's so interesting to me. It's like, I'm just not sure, had I not studied MailChimp as closely as I'd studied it, that I would have known it's possible. So I'm glad that other people listening will then realize that it's possible. You're not going to get there in a straight line. I didn't either. 6 weeks in, we had 3,000 signups and 13 customers, right? But like, when it clicks, freemium is magical. You know?
You have no idea how helpful this one was for me because we've just, I told you that we've just recently hired developers. We're doing a couple of really fun things.
Yeah.
I could try and be a little more bold after this talk. So that might have just changed.
So there's an old adage that I really believe in. Fortune favors the bold. I mean, I just think, as you can probably tell by everything I do, there is no, the downside to being bold is so much lower than the upside to being bold. Because if you really are being bold, you will stand out. Because that's what being bold is. Probably somewhere in the definition of bold, it's like relative to everyone else, you are, doing something with conviction and, whatever. You're cutting through, it has integrity, whatever. So I certainly believe in that. I think it will help you if you take steps towards it.
Perfect. So just lastly, if you had to pitch RB2B or retention to everyone listening, what would that pitch be?
Yeah, my pitch would be person level website visitor identity. We will push LinkedIn URLs of your website visitors who don't fill out a form to a Slack channel, and it is 100% free. Go to rb2b.com. RB2B.
Perfect. Awesome. Thanks again for doing this. This was an amazing episode. I'm still just thinking about all the things I could implement from it. So that's why I'm getting quieter though as the episode progresses in my head. Yeah.
Good.
Yeah. Perfect.
Thank you for listening to the TLDR podcast. In case you're wondering, Spear Growth is a marketing agency. We help B2B SaaS companies like yourself with ads and SEO. Check out our website at speargrowth.com. That is SPEARGROWTH.com. Just like this, every episode starts with a 1-minute summary of what we discuss. Pick the next episode to listen to based on what you can implement right away. And after you implement any of these tactics and see an impact, we'd appreciate you drop us a note on podcast@speargrowth.com.